Scott Shellady of Trean Group joins us on this Monday morning. Happy Monday morning to you, Scott.
Good morning.
How critical will the inflation numbers and retail earnings this week be to traders?
Well, it's going to be very critical with the Fed's dual mandate. We have to keep an eye on inflation. I don't think we've got inflation. I think we've got disinflation. Bernanke mentioned that in his last speech. Something to watch going forward. We actually might be in a deflationary cycle, so keep your eyes glued to the inflation numbers.
China plays were popular last week with people buying the metals because of some growth in China. What will be your play this week? What do you see happening here?
Well, I tell you what, I think you should stay away from China. China leads us in manufacturing. Only one thing, their economic numbers. We lead them in manufacturing, everything else just by a hair. So be careful about China. At the end of last quarter, 3 of their largest banks shut down their ATMs over a weekend. You couldn't take any money out. Something's going on there, and I'm not quite sure.
Ooh, good to know about that. What about the low volume and low volatility in the market? What will that mean for trading?
Well, let's just call that August. It happens every year. A lot of folks go on holiday in Europe, but I also think that with September coming up, we've got the German election September 22nd. So we're going to wait and see what happens with that as far as the EU goes. I think more bad news comes out of China. And then, of course, we've got October sequester cuts and Obamacare in January.
What would you do with your money right now?
I think I'm still playing the 10-year. That's the true serum. I'd stay away from equities. They're not really telling you very much. Be careful about getting long bonds. You know, below 275, we think that that's a good rate, and above 250, we want to get out. So 275 to 250 is the rate we're playing in bonds.
Thank you, Scott, and have a good trading week.
All right, you too.